This is lecture number 8 for understanding the costing basic. The contents which have been already discussed is given in blue, and in the last lecture, basic components of the cost sheet and what is prime cost and factory cost with calculations have been understood. In this lecture, the further components of cost sheet and the calculation for that, like office cost, cost of sales and sales is given, which are the components of cost sheet. And the same cost sheet, if we have some inventory like stock in hand, well, maybe in process, or raw material or finished goods, how to handle those costs are discussed in this lecture. So we already saw the components of cost sheet to be prime cost first, which is the sum of direct material, direct labor and direct expenses. In that we saw an adjustment for inventory. If the direct material, you purchase few material and you have older stock of materials, how to deal with that was also seen in the problem which in the last lecture. Then the second component of the cost sheet is factory cost, which is the sum of prime cost and factory overheads. In that also there is some adjustment for factory cost. We will see that in today's problem. Then after that we are going to see the third component, cost of production, then cost of sales, and finally sales. So we will see a total cost sheet today. So before going into the factory, after factory cost we have administrative overheads, in which you will be able to find, on adding these things, you will be able to find the office cost. After, so the examples for office overheads or administrative overheads are office rent, asset depreciation. So that are there in the office. Now this depreciation is not with regard to machinery that is there in the factory. We have already seen the depreciation of factory machinery there. Here it is asset depreciation. Then general charges that are for occurring in the administration. Auditor's fee. Auditor's fee is auditing is done in the office account, so it is an administrative overhead. Bank charges are related to administration, and accounting house salary. So these are few terms which are commonly used to describe administrative overheads. To get familiarity, I am listing it here. Other office expenses. So these are all the administrative overheads. Similarly, for selling and distribution overheads, salesman commission salary are, yes, indirect labor or selling and distribution overhead. And it occurs in the selling and distribution function. Traveling expenses, advertisement, delivery man expenses, sales tax, bad debts are all bad debts, people who have not given money for the product that is given. So all these are related to selling and distribution overheads. So the first two are related to labor and the other are all expenses. All these are contribute to selling and distribution overheads. All are indirect, that is why it is an overhead. So how to deal with this, these items in your cost sheet? Along with that, we have our adjustment for inventories. We saw already this adjustment, direct material, opening stock of direct material plus purchase of direct material minus closing stock of direct material. We saw a problem to understand this, to wherein you find the prime cost here. Next, similarly, when you are dealing with factory cost also, works cost or factory cost also, you may have some opening and closing stock. This is the best example is a spinning mill, wherein you will not replenish the material totally. Even if a new material is going to be put, there will be some amount till the mixing is getting over. It will take some 6 months to 8 months. Every month you are going to take opening and closing stock every month. So that has to be taken into account for product cost, because some materials that are there inside when you start and end have to be taken into account. The in progress material are the sliver, roving, that are all in the process. Drawing can, sliver, card can, sliver, comber, sliver lap, ribbon lap, all these things, materials that are there in the process is called as in process material, and the value of that material is taken into account for calculation, where you will understand it better when we do the calculation. Similarly, at the end, after say in an example of yarn that is produced, you stock the finished goods. You will not, it is not sent out of the factory for sales. Till that, it is a finished good. During the start of the calculation and the end of the calculation also, you have finished goods that are remaining. So you have to add the opening stock, and you have to subtract the finished stock, and this is to be taken into account when you calculate what calculation? Yes, cost of sales calculation. And here you will take into account for the, this is for office cost, and this is for not cost of sales, it is cost of total cost. It's because all these things are in the factory. Outside the factory, it is related to at the end of office you will have here. So we'll see the details in the example how to adjust for inventory. Inventory means that which is remaining as stock. How to account for the stock of raw material, how to account for stock of in-process material, and how to account to stock for finished goods. Raw material, in-process material, and finished goods. So how to deal with these things we will see in the problem. Now we are going to see problem. So in which you will be able to understand how to calculate factory cost with adjustments for inventory. We already saw prime cost calculation with adjustment for inventory. Now we are going to see factory cost calculation with adjustment of with adjustments for inventory. What is the inventory that is to be included for factory cost? Yes, it is in process stock. So we have a problem in which they have given the particulars and the value. The particulars that I have given are direct material. I want you to work it out. Pause and do if you are not getting adjusted with the speed. Direct materials, direct wages, and direct expenses. So with this, you will be able to calculate factory cost. There are no adjustment for prime cost is given. Next additional data they have given factory overheads as 5. It will not be 5. So it is 5% of prime cost. So they have not given the value directly. They have given it as it is 5% of prime cost. So after finding prime cost, you are finding the factory overheads by multiplying that value with 5 by 100. Next, what is the data that is given? Yes, opening work in progress. And next is closing work in progress. So work in progress or in process material, opening stock and closing stock is given. Now we'll see how to deal with this. So you have to put the cost sheet, particulars, total value. So we have direct material, direct wages and direct expenses, which we have already seen the problem in the prime cost. So the prime cost is the sum of direct material, direct wages and direct expenses. So it is the total of these things you are putting in the column. Since it is total, you are not putting it here. You are totaling and putting it on the right hand side. So I said this yesterday itself. I'm sorry, in the last lecture. So factory overheads. So now you have to calculate factory overheads. So what is factory overheads? It is 5% of prime cost. So 5 by 100 into 85,000, you will get 4250. So then after factory overheads, you have to find the works cost or factory cost, which is the sum of prime cost plus factory overheads. So now I'm telling it is gross works cost because you have some adjustments for inventory. So this is called as gross works cost. or factory cost. Now you have to add opening stock of raw material. You have to plus opening stock of raw material less closing stock of raw material. So, and now you will get, so gross works cost plus opening stock minus closing work in progress is factory cost. So 89,250 plus 21500 minus 17,500, you get 93,250. So now the factory cost is calculated. So we have seen the calculation till factory cost. So this is how you have to deal with opening work in progress. Now we will see a cost sheet with a simple cost sheet. This is also a simple cost sheet wherein we will have a complete picture of the prime cost, factory cost, office cost, administrative cost. Office or administrative, both are the same. Then cost of sales and sales. A total picture of cost sheet, but a simple one. So we will see what are the data that is given. They have given the particulars and the value for it. So what are those things given? Write it along with me. So direct materials, direct wages 30,000, direct expenses 20,000, factory overheads 10% of prime cost. Next, office rent is 3,000. Then asset depreciation is 2,000. General charges are 1,500. Auditor fees is 1,500. Bank charges 1,250. Other office expenses 1,500. Salesman commission 1,600. Salesman salary 1,750. Traveling expenses 2,350. Advertisement 4,500. Delivery man expenses 5,600. Sales tax 6,000. Bad debts 3,500. And profit is 5% is given. So these are the things which are given. Now let us find what are these overheads. So for factory overheads is given directly, others are given as particulars. So you need to find what is it. So office rent is an office overhead. It is an indirect expense. Asset depreciation is an indirect expense. So this is related to office. So again, asset depreciation is related to office. We saw already what are the overheads related to office. So next is general charges. Again, it is an indirect expense and it is related to office. Next, auditor's fee is again indirect expense and it is related to office. Then bank charges. Yes, again it is an indirect expense related to office. Then other office expenses is directly given and it is related to office. Next, salesman commission. Yes, it is an indirect labor related to, yes, it is selling and distribution overhead. Next is salesman salary. Again, it is indirect labor related to selling and distribution overhead. Traveling expenses is an indirect expense related to selling and distribution. So it is indirect expense not related to office. It is selling and distribution. So next is advertisement. Yes, it is an indirect expense related to selling and distribution. Next, delivery man expenses. It is given as expenses, not salary or commission. So it is an expense. Even though it is related to delivery man, it is an expense. So it is indirect expense, selling and distribution. Sales tax, again indirect expense for in the selling and distribution, bad debts again in selling and distribution. So next they have given profit. So we have to calculate, we have to prepare the cost sheet with this available data to find the sales. So how will you do that? You have the particulars, you have to put it in the format. Then the first is direct material. Put it direct material 35,000, direct wages and direct expenses. This is easy for calculation, you know already. So prime cost is direct material, direct wages plus direct expenses 85,000. Next they have given factory overheads. What is factory overheads? It is what they said. Factory overheads is 10% of prime cost. So it should be 8,500 because 85,000 is your prime cost. Next is factory cost. So how was factory cost calculated? So prime cost plus factory overheads, you get the factory cost. Next is you have to list all the administrative office and administrative overheads. Office and administrative overheads. So what are those things? We have already known. So we will take all these things which are related to office and put it here. So we have, as we have already for, divided based on classification. So office rent, asset depreciation, general charges, auditor's fee, bank charges, other office expenses. So all these things are related to your office and administration. So the sum of all these things is your total administrative office and administrative overheads. Then to find the office cost, you have to sum this factory cost, this one, and plus total administrative overheads 10,750 to get the office cost or cost of production. So now after cost of production calculation, you do not have any adjustment for inventories here. So next we are going to selling and distribution overheads. What are those things? As we have already classified, we can just take this and put it here. So we have these things. Salesman commission, salesman salary, traveling expenses, advertisement, delivery man expenses, sales tax, bad debts. So all these things are selling and distribution overheads. The sum of all these selling and distribution overheads is put on the next column as it is the sum to find the cost of sales. You're finding the total cost of sales by office cost plus selling and distribution overheads. You get the total cost or cost of sales. Now with this you have to add the profit. Profit is, it is given 5%. So it is directly given as 5%. Sometimes it may be given as percentage of the sales. So then you have to find this sales, or indirectly you have to find the profit. Now it is given directly a percentage, which means 5% of this 1,29,000, you get this value. It is not 5. Yes, it is 5%. Next is finally the sales, the last item in your cost sheet. Sales is cost plus profit. Cost plus profit is your sales. Hope you have seen this. I am showing the total. So this is the total cost sheet. Now let us look into a cost sheet with the adjustments for inventory. Um, you can see in this problem there is opening stock of raw material, opening stock of in-process material, opening stock of finished goods. What are these things? Can you tell an example in spinning industry? Opening stock of raw material is, say if it is for a month, then for a March 2020, then for the stock taken on 1st March 2020 for the bales that are cotton bales that are present in the godown is the opening stock of raw material. Similarly, at the same time, they will take stock of in-process material. What are the in-process material in a cotton spinning industry? In-process material, yes, it is the lap, the material in the jute feed that is getting processed, the bales, the material that is taken for the process in the blow room, the card cans with the sliver cans in the carding room, the ribbon lap, sliver lap, the material that has come out of comber sliver, or and draw frame sliver that are in the cans. Then the cans that are uh, present in the simplex, at the backside of the simplex, the material that is fed to simplex, the draw frame slivers, the material that is getting filled up in the, that is roving, that is wound onto the bobbins, how much material is there. Then bobbins that are in stock, that are in the ring frame, and that which are being processed, the yarn that is processed. So these are all in process. The yarn that is in the corps are all in process materials. Then opening stock of finished goods. Finished goods are cones that are packed and kept. So those cones that are packed and kept at the start of the month. Say all these things on 1st March 2020. I'm telling this as an example for a month data. If it is a year data, then it is 1st April and 31st March of the next year. Similarly, closing stock of raw material, again you will take the stock on 1st April if it is a month data. The same close data is opening stock of raw material for April and closing stock of raw material for March. Both are one and the same. Closing stock of raw material on 1st April is, I'm sorry, on closing stock of raw material of March is the stock in 1st April, or it is equal to the opening stock of the next month. So closing stock of, similarly in process material, closing stock of finished goods. Every month start, they will take the data like this in a spinning mill. Okay. This is a usual thing that every month start that they follow this. So hope you are aware of this. How we are going to deal with this? So they will take kgs and convert it into values like this. This is the value that is given for opening stock of raw material, in process material, finished goods, closing stock of raw material, closing stock of in process material, and closing stock of finished goods. So how to deal with this data and cost sheet, we will see in this example. I want you to do the problem along with me. Hope you have noted down. The first one is the question, given data, purchase of raw material is 55,000, direct wages 30,000, direct expenses 20,000, opening stock of raw material 15,000, closing stock, opening stock of in process material 12,000, opening stock of finished goods 20,000, closing stock of raw material 13,000, closing stock of in-process material 11,500, closing stock of finished goods 10,000, factory overheads 10% of prime cost, administrative overheads 15% of factory cost, selling and distribution overheads are 12% of office cost, profit 10%, and the units produced during this period is 100. So let us now prepare the cost sheet. So particulars, cost value, and the cost per unit. So we have direct materials or material consumed. What is that? Yes, it is the purchase. We have to take this purchase here, and this is the purchase of raw material. Okay, now we have to calculate this because along with the purchase, so we are putting that at the bottom. Second item is purchase. So the material that are purchased. Then along with it, what we have already seen in the earlier problem, how to deal with the opening stock and closing stock of raw material. Yes, it is plus opening stock of raw material. So this is the opening stock of raw material and minus closing stock of raw material. So here it is closing stock of raw material is 13,000. We are putting that here. So with this, you have to put a line here. Since it is Excel sheet, I cannot show that. You have to put a line here, meaning that these three are not a part of this column for the final. So you have to put a line here. Then find the cost of raw materials. So you get opening stock plus purchase minus closing stock, that is 57,000. So what are the units produced during this period? It is 100. So 570 divided by 100, you get 570. Next is what is the next item? First item is direct material in the cost sheet. Next item is, yes, direct wages. What is the direct wages that are given? Direct wages, direct expense also will take. Direct wages and direct expenses are 30 and 20,000. So adding these three, direct material, wages and expenses, we get the prime cost, which is the sum of these three, which is 1,07,000, and the cost per unit of prime cost is divided by the number of units produced. This one we get 1,070. What is the next cost that we have to find? As it is factory cost. So for that we require, what is that we require? Factory overheads. Factory overheads is not given directly. It is 10% of prime cost. We have already found prime cost. So factory overheads 10 by 100 into prime cost 1,07,000. We get 10,700. So with that we now get the gross factory cost or works cost. Why do we call it gross? Oh, you can call it gross or you can tell it factory cost before adjustment, as we have opening stock of in process and closing stock of in process material. Now let us do the adjustments for that. So how do we adjust? Yes, plus opening stock of in process material. See here we are taking and opening stock of in process material, closing stock of in process material. 12,000 and 11,500. So you are adding opening stock of in-process material 12,000 minus closing stock of in-process material, which is 11,500. So we find finally the work cost after adjustment, which is gross factory cost plus opening stock minus closing stock, which we get as 1,18,200, and the cost per unit is 11,080. Now, what is the next cost that we have to find? Yes, it is office cost. So, for that, we require administrative overheads. Again, it is given indirectly, which is 15% of factory cost. We have found the factory cost. Now, administrative overheads are 10%, 15% of factory cost, which is 17,730. Adding administrative overheads and work cost, you get the office cost or cost of production, which is the sum of this two. We get 1,35,930. Now, we'll do the adjustments for the finished goods because it is after protection. The finished goods have to be adjusted. So usually we take the opening stock of finished goods 20,000 and closing stock of finished goods 10,000. To this calculations, opening stock plus opening stock minus closing stock, we get the office cost after adjustment, which is 1,45,930, which is office cost plus opening stock of finished goods minus closing stock of finished goods. We get the office cost after adjustment. Here you can put, instead of gross, you can put it as gross or before adjustment. That is before adjustment. Before. So then we, so this is adjustment. Now selling, now next is cost of sales, for which you need selling and distribution overheads, which is 12% of office cost. So 12% of this office cost, you get selling and distribution overheads, which is 17,511. Selling and distribution expenses plus office cost will give you total cost or cost of sales, which is 1,63,441. So next is profit. So we have, what is the profit? Yes, it is 10 percentage. So 10 percentage we have directly 16,344, and the sales is cost plus profit 1,79,785.7. So with this we end. We will not deal with unit cost here. We will see it at a later stage. So now the cost sheet is prepared with the adjustments for inventory. So first prime cost, then office cost, factory cost, wherein you in direct raw material you deal with purchase of raw material, closing and opening stock of raw material. The closing and opening stock of in-process material is dealt with in factory cost, and the finished stock after your office in your office cost. So this is how it has to be done. Thus the cost sheet is prepared. Thank you.